Mortgage discrimination against seniors? Welcome back to Retirement Solutions for All Ages. I'm your host, Ruth, the retirement mortgage expert. Today, we're tackling a question that I often hear from seniors. Do lenders discriminate against us? It's a valid concern, particularly when older homeowners, perhaps with significant assets, find it challenging to qualify for a traditional mortgage. The truth is, while federal laws prohibit discrimination based on age, the lending criteria for traditional mortgages are strictly based on repayment ability. And that's where seniors, often living on limited fixed incomes, can face a hurdle. It's not about age discrimination. It's about income source and stability. We'll explore why so many seniors find themselves in this predicament, share a compelling example of how it plays out, and discuss how specific financial tools like the reverse mortgage for purchase can bridge this gap and provide access to the financing you need. Let's get to the heart of this issue. The ability to repay. It's a common and frustrating scenario. You've worked hard your entire life, diligently saved, and perhaps accumulated significant wealth in investments and your existing home equity. Now you want to move, or perhaps you need a traditional mortgage for a different reason, and you find it surprisingly difficult to qualify. Why? Because traditional mortgage lenders primarily look at your debt to income ratio and your ability to repay the loan through verifiable, stable monthly income. For many seniors, their income stream in retirement are fixed and limited, often consisting of Social Security, pensions, if they're lucky enough to have one, or distributions from retirement accounts. While these assets represent wealth, they might not translate into the high, consistent monthly income that traditional lenders require to approve a large mortgage loan. Lenders are legally bound to ensure that borrowers have a reasonable likelihood of repaying the loan, and their criteria are designed to assess that. So it's less about discriminating against seniors and more about the stringent rules for verifying consistent, sufficient income for repayment. John's dilemma, the executive who couldn't get a mortgage. Let me share an example that perfectly illustrates this challenge. I had a client, let's call him John. John was highly successful. He was an executive making very good money, and he had a substantial portfolio of investments. His wealth was not in question. However, John decided to retire early at age 55 and sell his home in a rural corporate town. Property values there were relatively low, even for a large executive home. His dream was to move to Florida, where buying an equivalent home in a desirable coastal community is substantially more expensive. Here's where he hit a wall. At age 55, John was in that pre-Medicare, pre-Social Security window. His substantial assets were primarily tied up in investments that he didn't want to liquidate early. And he no longer had a steady paycheck from his executive job. Traditional lenders looked at his current verifiable income, which was minimal because he had just retired. Despite his significant net worth and long-standing financial background, he simply didn't have the monthly income required to qualify for a traditional mortgage he needed to buy his dream home with in Florida. He felt frustrated, believing he was being penalized for being retired, when in reality, the system just wasn't designed for this specific income profile at that stage of life. Bridging the gap, the power of the reverse mortgage for purchase. This is precisely where the reverse mortgage for purchase becomes such a vital tool, especially for those aged 62 and older. For someone like John, he could get a proprietary reverse mortgage that starts at age 55 and becomes a hybrid of a traditional and a reverse mortgage. With a proprietary reverse mortgage, you might be required to make a portion of the monthly payments or full payments for the next few years. With a reverse mortgage for purchase, the primary qualification isn't about proving a high monthly income for repayment, but rather about having sufficient funds for the upfront down payment, typically 60 to 70% of the purchase price, and demonstrating the ability to pay ongoing property taxes, insurance, and maintenance. For John, a reverse mortgage for purchase could mean he could have used the proceeds from the sale of his rural home for the down payment on a more expensive Florida property. He might have manageable monthly payments for a few years, depending on the proprietary program, but it would be designed for his retirement income profile. His substantial investment portfolio could remain intact, compounding and growing, rather than being liquidated prematurely to buy a home outright or to generate artificial income for mortgage qualification. This isn't discrimination. It's recognizing that the needs and financial structures of seniors are different, and a reverse mortgage for purchase is designed to meet those unique needs. It provides a pathway to home ownership that traditional mortgages simply cannot, allowing seniors to relocate, downsize, upsize, right size into a home that truly fits the next phase of your life without the burden of ongoing monthly payments. Understanding the nuances of mortgage lending criteria is a key to navigating the real estate market in retirement. While traditional mortgages serve a purpose, specialized tools like the reverse mortgage for purchase are specifically designed to address the financial realities and income structure of seniors. It's about finding the right mortgage solution that empowers you rather than limits you in the next phase of your life. If you're a senior facing challenges with traditional mortgage qualifications, or you simply want to explore how a reverse mortgage for purchase could open new doors for your retirement living, let's have an informed, personalized conversation. You can reach me directly by phone at 828-888-LOAN. That's 828-888-LOAN. Thank you for joining me on Retirement Solutions for All Ages. If this episode sparked new insights for you, please leave us a review, share it with a friend who might benefit from these strategies, and hit that subscribe button so you don't miss future insights. Until next time, I'm Ruth, the retirement mortgage expert, helping you make every year your best.